get involved with that one. That is turning out to be a piece of crap. Alrighty. We got some movers and some shakers today. Oracle. Good old Oracle up, gapping up this morning. It looks like it's up about $8. I don't know why. Probably more buyers than sellers, but let's take a look at Oracle. Oracle. Let's see, stock market, blah, blah, blah. Oracle's AI expansion highlights hidden costs of data center leases. Everybody's a data center expert now, right? These stocks are moving the most. TikTok signs agreement. Okay, so that's probably why. TikTok signs agreement with U.S. venture. Oracle stock jumps. And that came out in Barron's. So that's got that up. That actually gapped up as much as 193. So that's actually good. I'm not going to complain about that. And you look at this one on the charts, and this has been a piece of a crap. An absolute piece of crap. An absolute piece of crap. Let's go into big tech. It's under cloud, and there is Oracle. And it honestly doesn't even look like it is done. Even though it's up big, it doesn't even look like it's up about $8 this morning, but it doesn't even look like it's putting a dent. Did definitely gap up to what could be perceived as let's see, back on the 17th. On the 17th, and I'll repeat it again so it makes it sound like I know what I'm talking about, but back on the 17th was a swing high of about 191 and change. We got up there and reversed from there. So I would actually mark that. I would mark that as a potential spot. Looks like about 191.73. We'll call it, make it a round number. Make it like 80, just to be. All right, and so just good to put a mark there. If we do, in fact, break out up and above that, right, this will hopefully become new support. But, look, I've had I had a bunch of lines in here that all just made no sense, right? That basically just got blown out of the water. So technical analysis, schmanalysis, when it comes to that. But, hey, if you have a religion and you stick to it, and you're a technical person, there you go. So I would be looking at that today for a potential breakout. If it does absolutely be able to get out up above that area, we might have something. Thing may have some legs to run up to $200. It's likely to run into a boatload of resistance up there. You can see there's a huge red band in there at around $200. So take it as it may. The nice thing about Oracle, if there is anything nice, is that the volatility is somewhat still okay. I'm not going to say it's good or great, but it's okay, and it's still running above average. This stock normally runs in the 30s overall. In fact, there was a time when it literally had never had volatility. It literally was like a Cisco. Yeah, and you can see I own some stock, right? I have a couple shares. I don't have a lot. 70 shares in one account, 25 in another. I've refrained from buying because I really want to see it, bounce. I'm not just going to go and pile into something that's going to get beat on day after day after day after day after day. I want to see a reversal, and I really don't. Maybe this is it. I don't know, but we've been through this drill before. But the thing about Oracle and where its volatility is here, if you're looking to trade it, there is some implied volatility down the curve. January, right here in March as well, a little inflated. So, take it as it may. If I were to do anything in here, as you can see, I'm already in some stuff in December. I'm like way out, but I'm also in some stuff in March. I would stay away from these front months. Obviously December is going to, an easiest thing to do here is to get rid of. I don't do the weeklies, folks. I'm sorry. I know a lot. I'm getting some feedback from people who are asking, like, how come you never do the weeklies? I see a lot of people do. It's not my wheelhouse. There's people who use them and they make a living out of doing it, and I guess they're really good at it. I don't know. They've never really done, unless I'm doing like an earnings trade or something like that, or something specific where I'm looking for literally like a 1 or 2 day move in something. But overall, I never really do the week. I pretty much stick to the monthlies. But I would stick in March if I was going to do anything in here, and only because you're going to want to give yourself a little bit of time. Because I think in the short term, Oracle is going to go through a real heavy gyration here. And as I said once before about Oracle, I think their problems really are not. Their problems are not structural. It's not about the debt. It's not about the data centers. It's not about all the stuff. It's really about public opinion overall. And if you don't think public opinion has an influence on, hedge funds and big money, it absolutely does. Because if a company is actually getting bad press, nobody wants to show that it's in their portfolio or that they have a big position in it if the press is bad, because they don't want to be associated with it. And that's kind of, I think, what's going on with Oracle right now. And until that actually cycles through, and as I said, time heals all wounds, because right now with everything going on. So I would stick in March, and what I would look to do here is I would look to do a little mixture of two things. I would sell some puts here, but I would also dabble and put on some calls. And if you can mix kind of a put spread with maybe a little call spread, that's probably not a bad spot. I would stick around I would stick around in the money stuff. I would not go out of the money, especially in March. If you want to go out further than March, I would do something like this. Now you can see here, I'm already in, I'm talking my book a little bit here, but look, hey, who doesn't? I'm already short this. I'm actually hanging in there with it because I have enough time to where I think, this thing can have some potential to come back. Right? So, but I would mix a little put spreads here with doing some call spreads, and I would stick out of in the money on the call side, and on the put side, I would go down to about the 22 or even the 25 delta. Now, these are actually going to be, it's probably 170 is probably going to be about the 25 delta today, since it's up a bit. So I would look there if you're looking to, get in on some Oracle here. Nice thing about this is that they do have $5 wide strikes. But unfortunately, when you get up over 200, so if you went out of the money, you're talking after 200, they're all $10. So Again, it's just a function of price. It's just how I roll. But I wouldn't, I would definitely look around the 85, 185, 190 and do something simple, like a 185 or like a 195, 190, 195, which in fact, that'll actually be out of the money today. But even the 185, 190 looks very attractive to me. Now, if you wanted to put on like one big trade, you could do this as one big trade. You probably have it's probably a pain in the ass to kind of put it on. The nice thing about this trade is you're kind of mixing a little bit of, you're selling a little premium here on the other side. You're also buying some calls that are at or near the money, and you're giving yourself some decent amount of delta in here if you want to get long and kind of play it that way, and you're not using a lot of capital. So I would kind of do that. Again, I would stick to March. If you want to go out further than March, I would go out to June, try to stick to the true quarter type of stuff, right? March, June, September, right? That type of stuff. Now, these are not labeled as quarterlies, but in fact, they kind of are, right? Because this is the June, so this would actually be considered the second quarter. So anyway, needless to say, if you were going to go out of the money and maybe dabble in, like, say, a 200, I would go out to June. Again, giving yourself a little bit more time to be right. If I was going to go out to June, I probably wouldn't even do this kind of spread. I would do a calendar spread. I would probably buy the 200s and then look to sell either a May or an April. Doesn't matter. I would actually probably go April and sell like a 1 or 210. Now it's going to be a little costly. It's probably going to run you about I was going to figure about $800 or $900. But what the calendar spread does is it gives you that flexibility where if this time is not enough for you to be right, you have the capability to roll this. And since you're in April, you have 2 months to roll this sucker. In fact, 2 months and even 3 months to roll this, depending on where things go, to kind of keep the dream alive. Okay, and so that's kind of the beauty of the calendar spread. And you can see the calendar spread also gives you a little bit of downside protection. And then if things go south, you do have the capability to roll this sucker, and that will change. And you see that delta going down, that will change the overall outlook of that trade over that time. So that's how I would play it if I was going to go out that far. Again, so the calendar spread, March, mix puts and calls, stay in the money. And if you're going to go out further than March, go to like a June and do a calendar spread. So there's Oracle, kind of sliced and diced that one. I likely am not, just full disclosure, I'm likely not going to do a lot of those trades because I already have a number of positions already in there. But look, it came up as a discussion point this morning because it's gapping up. There's news, and just kind of give you my feeling about it overall. And so that was kind of how I decided to start the game. So let's switch gears now and look at some of the markets. Overall, yesterday was a pretty decent day. I think if I were to rate yesterday's price action, to me, it kind of looked like it perhaps, and I don't want to speak too soon, but it could have definitely, there's a likelihood that it quelled a lot of the fears that have been brewing out in the markets. But we will see. Right? Every day is a new adventure. This morning, we're relatively flat. There wasn't a good decision in Japan, well, at least, going forward for us. of them increasing interest rates in Japan overnight, that I believe has put a little bit of a damper on yesterday's rally because of that, and we'll see how the market digests that. The bond market did not like that news. Like, even though they knew it was coming, the bond market is not digesting that very well. Right. And if anyone, not familiar with why that's important, there's this whole, I think I've seen more posts from completely random people who are acting like, something new has gone on about that carry trade, right? Where everyone not familiar, there's that carry trade between the US dollar and the, Japanese yen. You buy dollars, you sell yen, you buy yen, you sell dollar, blah, 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 right? It's been around for fucking ever since I can't remember. It's been going on. And now all of a sudden, this generation has 10,000 idiots who are out like, well, there's a carry trade. It's like, God, dude, shut up. Shut up. Like, you know what I mean? Talk about something else. Talk about something new. We know what it is. And if you don't know, just call AI. I don't need you to come out and make a goddamn post about it like it's something new. So anyway, you have that going on, and bonds really did not digest that very well. But they are bouncing, though. It does look like, we did hit some lows here at about 115.04. Rallied back up to 115.13 and currently trading 115.09. Same thing happened on the shorter end, on the 10-year as well. Similar price action. Overall, though, there does seem, now if you were to overlay the 10-year with the 30, the 10-year seems to be on a bit of a better trajectory up than the 30, right? The 10-year to me looks a little stronger, which could indicate that the yield curve is steepening a bit. I am already long some 30. I'm about to, and I believe today, I was kind of waiting for this decision. I'm looking to get long now, some shorter term stuff. Now, the thing about the shorter term stuff, there is not a whole hell of a lot of stuff to do. Now, there's a lot of things that get labeled as things to do in the bond market, but overall, there really is only one thing that truly marks, and probably you can overlay it with the 10-year, is this IEF, which is which iShares 7 to 10-year Treasury bond, which if anybody remembers, and I'm dating myself here, this was called what? The Shearson Lehman. Yes. Yes. Anybody who remembers. I remember this was the Shearson Lehman. Yes. In fact, even before it was the Shearson Lehman, it was the Lehman Brothers. Yes, it was. It was the Lehman Brothers 7 to 10-year Treasury fund. How about that? Put that in your quiz pipe and smoke it. But there is not a hell of a lot to do in this space. And man, the wind is howling out there. Like, it is just nasty. Anyway, there is not a hell of a lot to do in this space as far as product. And again, like I said, there is a number of different products and they all have them. Vanguard has it. Schwab has a bunch. But none of which are, in fact, as heavily traded, and many of which do not have really the options markets to capitalize on that. So let me just do something here real quick. So I'm looking to get long. So moral of the story is, and all that platitudes that I just spewed out about nothing but bullshit, I'm going to get long some shorter term shit is really what that means. Yes, that's all that means. But, you know, hey, look, just like everything else in the investment world, it all has to have some bullshit backstory. So it makes it look like you know what you're talking about. So you can sell subscriptions. Right? Isn't that what it's all about? Isn't that what this business is all about? Right? About everybody who's out there who always claims to be, I'm out to help the little guy. But you know what? You're out to help the little guy, but no, you're not. Because you know what? You're charging people $150 a month to join your fucking dopey fucking service, which, you know, if you go down pound for pound, there's probably about 30 people that are in your circle that you use to pump your crap. And then anybody else who tries to call you out that you're full of shit, right? They quickly get quieted out and drowned out on social media as just a hater. You're just a hater and you're jealous. You know, no, it's, they have legitimate gripes. It's just you've managed to build a community strong enough to go out and just like silence people and make them out to be the bad guy. So anyway, needless to say, there's not a whole hell of a lot to do in here. So what I'm looking to do is I'm going to play some pretty long ball here, and I'm going to go out to June. And what I'm going to do here is I am just going to buy a real simple. Now, there's no volatility. You're not selling volatility in these products anyway. I don't even care if the volatility goes up to 100 in here. You're just not selling volatility in here. It just don't work. And it's because of the product, right? So I'm going to play long ball here, and I'm going to do a 95, 100 call spread. And that's it. Plain and simple. All right, and I'm going to play long ball, and I'm going to play for, you know, bonds to have a pretty decent move here going forward. All right, the trend is up. I do think bonds, although it's not going to be a rocket ship, folks. That's why I'm out 180 days. But you know, I do think it's worth buying a little short stuff. So there you have it on the IEF. Nothing extravagant there, but you know, definitely building a bit of a position in the IEF. And there's what it looks like. Again, not a sophisticated trade, pretty bare bones at that. So, what else? Crude oil. I'm still going to continue to build a little bit. I'm kind of getting my ass kicked. Here you go. I mean, you know, nothing to hide. I get my ass. Look, I'm getting my ass whooped pretty hard in a lot of stuff right now. No question about it. Even in the USO here, I'm down $187. Not that I'm getting completely right. I'm not getting wiped out. 180 here. It adds up, though. It adds up. But I am synthetically long, and I am just going to get. And all I'm looking for out of crude here, and I'm not looking for a huge bounce. All I'm looking for is for this thing to get to about $60. It gets to about $60 a barrel. All this stuff should come in fine, and then I am done. Because let's face it, although I kind of realize that crude oil is going to kind of gyrate around here, it's about $60 a barrel where it actually pays for them to produce. Because once it starts getting down to where it is here in crude oil, you know, you start getting into the conversations of, is it worth production? And they start to actually cap production. And so, the sweet spot is around $60. So anyway, that is kind of how I'm playing that. And I continue to be bullish on that. Not bullish, but at least short term, I think there's going to be a decent bounce at some point. Natural gas, I completely bailed out of I was in an iron condor, and I bailed. I got the fuck out. I just couldn't, didn't really get the move that I wanted. Volatility was not coming in. I wasn't digging the price action. We go into natural gas here. I wasn't digging the price action. Although the volatility in here, if we were to bring it up, the volatility here in natural gas still looks extremely interesting. And I was in a January. It just wasn't working. So I actually ended up taking a loss. I took like 110. I think it was 110. It was either 110 or 120 loss on it. I had rolled it once. I rolled my calls down. But again, volatility never really kind of came in here at all. And, I just, again, it was just one of those things where I was like, you know what? I'm just going to accept it. I'm going to eat my porridge and take my ball and go home. But I am, unfortunately, because I'm, a little retarded, I am actually looking at another position in here as well. I kind of like it down here. And instead of doing an iron condor, I may actually lean into this a little bit long here. We've had some pretty decent gyrations. And look, if we kind of hold this spot, now look, natural gas too is not the best. It is not the best thing in the world to trade on technical analysis. I don't give a shit what anybody says. If there's any product that completely does the absolute opposite of what anybody does or predicts, it's natural gas. It is basically a completely its own world, its own entity. And don't let anybody kid you. If anybody tells you that they've figured out natural gas, they are full of fucking crap. Anyway, with that being said, and me being a trader, I kind of like it down here. I kind of like it, now I could have just blew out of my calls and kept the puts that I was in, but by doing that though, it just kind of wrecked the whole premise of the trade, because the premise of that trade was to sell volatility. That's why I did an iron condor, right? So, and it didn't work out. And so, with that being said, I'm actually looking at something here. I don't know if I'm going to do it today. I know we're down today. I'm kind of expecting maybe a little bit more downside. And I was looking here in January. I kind of like selling about a 35 delta put spread here in Natty Gas. This is what I'm looking at here. It's got about a 70% pop. I'm looking at selling the 340.33. I'm going to use about $600 worth of buying power. This is what it looks like on the curve. If it matters, you kind of get the idea. The thing about this trade, though, is that, look, it has, in order for this to work, it needs to go up, period. Regardless of what the volatility is at this point, this kind of trade, it's got to go up, or it ain't going to work. So anyway, that is kind of what I was looking at in natural gas. Again, always like to be in a risk-defined trade in natural gas. I do not, by any means, and I repeat, do not do anything uncovered in natural gas. You will blow your, I don't care if you think you are right, you got the greatest opportunity in the world. I will guarantee you, you will blow your fucking count to pieces. It will guarantee you that your account will get blown to fucking pieces. Do not ever do anything uncovered in natural gas. There you go. There's my disclaimer. But no, really, seriously, do not. So anyway, I like this trade, but I would honestly like us to pull back a little bit here, if in fact we do. All right, so there's natural gas. And then as far as the other commodities and whatnot, no interest whatsoever. I will tell you the truth. The one commodity that looks extremely interesting to me, but I don't want to, copper. And the problem with copper is it's a lot like natural gas in that it's a big product. It's a big product. It's a big product. It doesn't have a lot of volume, and there's not too many ways to trade it outside of the futures. And don't let anybody look. There's some surrogates like Freeport-McMoRan. I think you can use, and I do use that as a surrogate. But as far as like trading something to trade it, you really have to. And this market looks extremely interesting to me, to the short side, as crazy as that sounds. I don't think in the longer term, and when I'm talking longer term, I'm talking 3 to 6 months. I'm talking about something in January. I'm kind of expecting this thing to have a little bit of a right now, if you were to look at this thing does look like it just broke out. But is it sustainable? I don't know. I don't believe it is. Short term, I don't think it's sustainable. And I'm expecting this to pull back. Long term, I think it's fine. I think it's going to $6 by the end of next year, by the end of this year, or near the end of this year, just because of the sheer demand of the data centers. And data centers are built on copper, folks, period. Don't let anybody kid you. They're built on copper, because look at all that power that's goes in there, and they're still using copper wire. They ain't using no substitute for that. So they need a lot of copper. So anyway, but I do think short term, it's kind of overdone, and it's been smacking its head. Now, is this a breakout? I don't know. We have pulled back. But I would think short term, something in copper, which is the old HG, may not be a bad trade. But the problem, again, with this... And, oh, wow, I didn't know that. So I guess you can't buy copper futures on Tasty Trade. How about that? Did not know that. All right. You know where I've traded these before, though, is on Schwab. I've traded these on Schwabi. Schwabi. Yeah. I've traded these on Schwabi. Yes, I have. Yep. And so if I were actually to do anything, I would do something in January, and I would look to lean in a little short here. But again, the problem, and I would stick around the 30 so delta is going to bring us out to, there's not a lot of, let's see, the 34. Let's try the 34. The 34 delta. Let's do the 57. I'll do the 57, 58. Ugh. 57. I haven't done anything. I haven't bought anything on Schwab. It's so friggin' long. 57, 58. What the fuck? Are you fucking kidding me? It doesn't let me do this? Are you, what the fucking fuck? Are you fucking serious? You fucking piece of garbage. Now I know why I haven't done anything on here. What the fucking fuck is that? The fuck out of here. You fucking piece of... What garbage. You suck. You friggin' suck. Piece of friggin' garbage. You know what it's going to say? What is this garbage, man? I'm hitting the control key. It doesn't work. What the hell is going on? You used to be able to just do that. And now it doesn't want to do it? What's the story with that? What is that? Oh, there we go. Let's see what this is going to run me. $1,100. I mean, yeah. I mean, I would look to do something like this if I was going to do something on copper. Is a little call spread here. Oh, big spider taking a walk on the wall. How about that? Something like that. I wish I could display it a little bit better. So, yeah, that's what I would look to do in copper. This sucks. Anyway, needless to say, that's kind of blows. All right, so then that's what I would do. Get short copper here short term. Nothing crazy. Small little baby trades. And that's it. I think last but not least, I think I kind of hit most of the avenues that I wanted to hit. Basically trading most of these broader markets here only because, as I said, a lot of these stocks are overall, there's really not a lot of there to do. I mean, they've been beaten down. So what I'm going to tell you, you get long. Yeah, that's about it. That's all you can do. You want to keep shorting them, go ahead. But I think if you do, you're going to get your face ripped off, shorting them because I just don't think there's really much else place to go. Let's face it. You have a lot of money chasing a very limited amount of stocks. All right, and so that's about it. So let's see. ES is up 750. Couple orders went off. ES is up 750. Nasdaq's up 69. Russell's up 4. Gold is about flat. Silver about flat. Bonds off a bit. Crude oil getting a little bit of a bid, not much. And I think Bitcoin, I even mentioned Bitcoin. Bitcoin's up 3K. Wow, how about that? And then there was a bunch of earnings, I think, like Nike. I think that's actually getting destroyed this morning. I'm glad I didn't do. I was going to do a trade in that. I am glad I didn't. It is getting absolutely destroyed today. And if you look at this stock, this stock is in trouble. It does not look good. I mean, the glory days of Nike are, if in fact, over. I mean, look at that on the daily. This is probably a poster child. This is an absolute poster child for a head and shoulders pattern. Now, it does look like it may emerge from it, right? Because at the end of every head and shoulders pattern is usually a bullish pattern, or maybe another head and shoulders, who knows? But this chart does not look good. Would I short it here? Obviously not, right? Because we're getting this big gap down. I don't even think it's worth even jumping in on this as a trade. They are absolutely pummeling this, and I don't know. I don't see it. What else is in the news? So there's that's not doing too well this morning. And why does this stupid shit keep popping up? Why does that crap keep popping up? Let's see. I see what else is moving this morning. Nike's down. Lyft is getting a bit of a hit. JD taking a little hit. Exxon's down a bit. What else is hitting the tape here? MSauce, nothing there. Fold. Oh, what is FOLD? I have no idea. What is that? FOLD? What is that? Amicus Therapeutics. Okay. What's that all about? I've never heard of it. I'm not going to deny that I know anything. I don't know Drek. I have no idea anything about it. BioMarin to buy. All right, so they're going to get bought. Went wow. So good for you if you had it, and bad for you if you missed it, just like me. And now you'll know I'll never have to talk about that one ever again. Right? After this is like one of those one-day headline stocks, and then it will vanish into the Neverland, and you will never hear anything else about it. Other than that, KBH. What is that? That is Kinder. What is that, KBH? It looks familiar. What is that? What is KBH? KB Homes. Okay, I kind of thought it looked familiar. That looks like it's up. I guess they had earnings. Is that what it is? Nike after hours, KB Homes delivers fewer homes, narrows profit amid housing market stagnation, and it is down pre-market. This one, I don't know. This does not, I don't know if something like this bodes well. I kind of like this. I kind of like this short here at 58. To me, I kind of like this one short. Let's see. I don't really trade this. I don't think there's probably... I actually like this short. Unfortunately, it's down so much today. That does kind of suck. I kind of like this short, though, just on this pattern, right? Like, was here, like, look, it was up here. Oh, it's like a fucking retard. It's up here. It's down here. But no, you have to me, you have a pretty distinct Head and Shoulders. And I'm not like a whole, I know I keep repeating Head and Shoulders, but Head and Shoulders is a pretty powerful one because it really is like a more broader based one that I know that is out there in La La Land that a lot of people take under account. And, you know, I don't know, history kind of proves, I think when you look back, head and shoulder patterns are something that are a pretty strong pattern. And I'm not a pattern guy, folks. You know, you follow me. I point them out when I see them, and it's not, I don't point all of them out. But, you know, the big ones, the main ones, you know, double tops, double bottoms, that type of garbage, you know, head and shoulders, reversed head and shoulders, ascending triangle, those I kind of usually recognize. As far as a lot of the other ones, like, you know, rising wedge, a flat, like, I don't know. I think I can figure them out, but I don't. But this looks very bearish to me, and I actually kind of see this thing coming back to $49. I do. I kind of like this. I'm kind of sorry I didn't. I did not do nothing here. But I think it might be worth. Let's see. We'll put the red bar there. I think you got a top here. I don't think you're going to be able to. And I think you can see this thing coming down. This is KB Homes. I think you can see this thing coming down to about $49. Here, it's trading, 46? I mean, that's not a huge move, but I think it's enough to where, you know, if and when it does, and I also think it may have, you know, it has a lot of potential. Look, if I'm going to be a complete chart wonk, I'm going to look at this down here as a potential target. On this, you know, first target being 49, and then if it really, you know, gets dragged to the woodshed, that could really bring it in. Now, you know, who knows? A lot of things can happen, housing market, but you know, overall, from a chart perspective, this looks like a crap. So yeah, I'm going to look at this one short. Let's take a look at March. And likely some of these will actually be a lot cheaper. We trading at 57. I kind of like the 60.55 here. You know, again, just taking a little shot. This is probably going to be closer to like $2. This is going to be like $2 because this is going to go away. This is going to go away today. I mean, if you get in early enough, yeah, and there's not enough implied volatility even out here to even sell calls. So I don't think I would sell a call out here. I mean, if you want to get aggressive, I guess you could, but I don't really see any need. Yeah, but yeah, I'm going to definitely look at leaning long on KB, and I'm not going to do anything crazy, folks. It's going to be something simple, right? So look at a put spread. I wouldn't even look at a calendar. I'd go out to March, and I would look at a simple put spread like a 50, is 60, 55, or even a 55, a 50. Look for a little bit of a little bit of deflation in here, and have this thing come back down to about, like I said, about $50. I think you got some room there for this to kind of go. So there you go. And then that's it. That's all I got. All right, so have a good one. Have a good weekend. I do not think much is going to happen today. I think we're going to be in an inside day. I think we're going to see some definitely. If you notice here, just on the ES, we'll stick that chart up just for the hell of it. We have been in an absolute, like, look, I got these two lines marked, and we have just chopped to holy hell. And I expect much more of that. All right, and then NASDAQ, kind of same thing. You know, little more choppy for sure. But for the most part, pretty much same type of thing. And a Russell as well. We are just chopping and a slopping. All right, so have a good one, and hopefully have a good weekend, and I will be back on Monday for a short week.